So if they find.
Okay, I'm here. Can y'all hear me?
Yes.
All righty. So we'll give a couple of minutes for everybody to join. The first thing that we are going to be covering is the last concept in chapter 7 that we haven't discussed in class.
9 o'clock.
Sorry, it's always me.
And I want we're going to first talk about page 368. Then we're going to go through the problem on page 363. So that is where we're going to begin. So for those of you that are here, go ahead and go to 368, and then we will go to page 363.
Mm-hmm.
All right, and today I'm probably going to be doing, I did in the 8 o'clock class, so I assume it's going to be efficient in the 8 o'clock class where I'm sharing my screen and showing you how problems are calculated. I'll be doing them in Excel. For the exam, you know that you've got your notes, you've got your book, you have your calculator, and you've got Excel. So from a timing standpoint, you can have your Excel there, but there may be, anyway, I'm going to be demonstrating some problems in Excel. I'm going to want y'all doing them in your calculator so that while you're taking the exam, you're prepared to do it either in Excel or in the calculator. Okay, so as everybody is coming in. All right, so everybody on 368, and I want a full screen here. And all right, I want everybody on page 368. And one of the things that companies can use their accounts receivable in order to obtain financing, okay, in order to get cash inflow. They can do that when we look at page 368. They can do that either by pledging or assigning their accounts receivables, which do not qualify as a sale. If you look on page 368, it gives you the one of 3 conditions that meet the conditions for selling. And the bottom line is, just like we learned in chapter 6, has there been transfer of control? Has there been transfer of control of the accounts receivable to the buyer? Well, a company needs cash inflow. They can go to the bank and they can borrow money and say, we're going to pledge our accounts receivable on this note, meaning that their accounts receivable is going to be the collateral. Give you an example. We buy a car. We finance the car. If we don't pay for our car, if we don't pay the note, then the bank can come and repossess our car because we have collateralized the note with our car. So companies can borrow money, have a note payable where they have pledged or collateralized their accounts receivable to the note, meaning that if they don't pay their note, then the company can come over and take their accounts receivable and the customers would be paying the bank instead of the company. Okay? However, we've just borrowed money. We have not transferred control of our accounts receivable to the creditor, the bank, the person who loaned us money. We would only transfer control, if we didn't pay our note, okay? So we did not transfer control. We can also assign our accounts receivable. And assigning accounts receivable is that I can borrow money and the bank says you're going to assign certain accounts receivable to me. Say, for example, I borrow $100,000 from the bank and I've got 3 of my accounts receivables, 3 individual accounts receivable, company A, company B, and company C, that their accounts receivable combined is $100,000 or a little more than the 100,000. So I've assigned these 3 specific accounts receivable to the bank that would more than cover the note if I don't pay my note. So if I miss a payment or I don't pay, let me start over. On the assigning, I have assigned the accounts receivable. I borrowed $100,000. Company A, Company B, and Company C that are customers of mine have receivables that are $100,000 or more that I have assigned to the bank. Well, when Company A, B, or C pays me, I'm the company that has borrowed the money, I own the accounts receivable, that when my customers A, B, or C, which are the 3 accounts receivables that have been assigned to the note, when they pay me, I am required to remit the accounts receivable that I just collected. I'm required to remit the cash to the bank within a certain number of days to pay my receivable. Okay? So the payment terms of that note receivable are that you pay me when these customers pay you. That is what an assigning is. Whether I have pledged my receivables or assigned my receivables, I am still maintaining control of my receivables, so they do not meet the conditions of a sale. There are no journal entries when we pledge or we assign our accounts receivable. We would have to do a disclosure in our disclosure notes. A disclosure is required. And we would just, in our disclosure notes, say that our accounts receivable or a certain portion of our accounts receivable have been pledged or assigned, depending on which one it is, to X bank for our notes payable. Okay, no journal entry required. Now, if they do meet the conditions of a sale, meaning that there has been transfer of control of the accounts receivable, then we do have to record the sale of receivables because we have sold our accounts receivable to the factor, the buyer, the person buying our accounts receivable. When you look on page 368, there are 2 types of sales: with recourse and without recourse. What does with recourse mean? So if my contract with the buyer has the contract terms that I am selling my receivables with recourse, what does that mean?
The seller retains risk of bad debts.
Okay, good. That the seller doesn't retain because they never had, oh, sorry.
Doesn't he
With
retain?
recourse, I'm sorry, I was off at my 8 o'clock class. For some reason today, I woke up and I foolishly watched the news for 30 minutes and it just got to me. So I'm rebooting, and so accounting is my happy place. So now I'm in my happy place and forget the news. I'm not going to watch the news before I teach again. So if it is sold with recourse, then as Matthew said, I believe that was Matthew, as Matthew said, the seller, which is me, the company, I have retained the risk of uncollectability. Okay. If it is sold without recourse, then who has the risk of uncollectability on the accounts receivables that I have sold? So if I have sold it without recourse, who has the risk of uncollectability?
The buyer.
The buyer. So the buyer has assumed the risk of uncollectability. They have no recourse to come back to me for any of my customers who don't pay. Okay, so that is the difference between with recourse and without recourse. The difference between with recourse and without recourse.
So with recourse, the seller can have has the ability to come back and ask for its uncollectibles.
Correct. And
Okay.
that is the reason that when you see the journal entries for a contract with recourse, we're going to have the account recourse liability. You're going to have an account recourse liability. This is a new account, but it's a liability account, which represents the amount that we estimate is going to be uncollectible that the buyer is going to come back to me for. Edris, that help? Edris, were you the one that asked the question?
Yes, it was me.
Okay.
Thank you.
So does that explain it? So you're going to have a recourse liability when you have a contract that is with recourse.
I got a question about that real quick.
Sure, Matt.
Will there also always be like a bank fee in that? Because when I did the question last night, it was like a little 2% like bank
Yes.
charge. Okay.
Yes. So let's go over the problem that is on page 363. Now, this is the problem in the book. And no. God bless you.
Thank you.
It is page 365. Oh, I pulled it out of my book and it is, here it is. Okay. So on page 365, I am going to be talking to y'all, but I am going to bring up my Excel. So I'm going to share screen, and what y'all should see right now is an Excel spreadsheet. And instead of using the board, I'm going to use the Excel spreadsheet. before we get into the details of the problem, I want you to look at the journal entry, okay? I want you to look at the journal entry. And we see that the journal entry, we debit cash. Obviously, this will be for the amount of cash received, okay? We also are going to have a debit to loss on sale of receivables. And the loss on the sale of receivables is going to equal the sum of three things. It's going to equal the decrease in the fair value of the accounts receivable plus the factor fee. I knew it was going to do that because of plus the all right, I'm going to get this yet. Oh, okay, we're starting over. Plus the factor fee and also plus the amount of estimated uncollectible accounts. And this is when we have contracts with recourse. So this will be for contracts with recourse only. If there is no recourse, then we are not going to have an amount of us unestimated accounts, because if it's without recourse, then they cannot come back to us for uncollectible accounts. So your debit to your loss on your sale of receivables is the sum of these three items. You're also are going to have a receivable. Just don't pay attention to a receivable from the factor. The factor, again, remember, is the buyer. The factor is the buyer. And you're going to see in these contracts, whether it is with recourse or whether it is without recourse, that the factor is going to withhold a certain percentage. They're not going to, when you sell the receivables, they're only going to give you a certain percentage of your receivables on the day that you sell your receivables. They're going to withhold a certain amount just for their protection, okay? So the amount of your receivable from the factor is going to be the percent not given up front and could also be decreased by the amount of the factor fee. Now we're going to work a problem here where if not collected up front. Now what I mean by collected up front is we're going to work a problem in the textbook where the factor fee is subtracted from the amount of the cash received immediately. So sometimes they collect their factor fee from the first cash that is remitted on the date of sale. Sometimes they will wait and collect the factor fee from the remaining amount that is going to be distributed later on. In other words, we see in this problem that they advanced 90%. So the 10% that is not advanced is they can either take the factor fee out of the 90%, or they could take the factor fee out of the 10%. It depends on the verbiage of the contract, okay?
Is that receivable from factor a credit or debit?
Yes,
I asked or.
because a receivable is an asset and we're going to be increasing an asset. So your cash is a debit, your loss is a debit, and your receivable from your factor is a debit.
Okay, thank you.
You're welcome. Then we can credit accounts receivable. I indented it to show that it's a credit. And you're going to credit accounts receivable for the book value of the accounts receivable sold. So you're going to credit accounts receivable for the book value of the accounts receivable sold. Now we can also have another credit, and that credit would be a liability called recourse liability. Recourse liability, and this would be for contracts with recourse for the amount estimated that will not be collected. Okay? So our debit to cash will be for the amount of cash received. You're going to have that in both recourse and not recourse. Your loss on your sale of receivables. You're going to have a loss whether it is with recourse or without recourse. That loss is the sum of the decrease in the fair value of your accounts receivable, plus your factor fee, plus the estimated amount of uncollectible accounts, but this would be only for contracts with recourse. So this would be only for contracts with recourse.
Why does the fair value decrease?
The fair value of accounts receivables decrease because of, we know we're not going to collect 100%. Also, there can be, remember, accounts receivable, we aren't charging interest, but certainly when a factor is buying receivables, they have to take into consideration time value of money. When you are calculating the fair value of any asset, you are taking into consideration market rates, okay? So your accounts receivable, although a current asset, the fair value of it can be lower than what your book value is because of uncollectability reasons. And then also the buyer is going to take into consideration time value of money. Although they may be collecting it in a short period of time, 30 days, 45 days, 60 days, they are going to take that into consideration. So that is the reason that fair value of accounts receivable can be different than its book value. You will not be calculating the fair value, okay? That will be a given. Then we will have a debit, the receivable from the factor. And the receivable from the factor will be the amount that they withheld when they initially gave me cash. And then it can be affected by the amount of the factor fee depending upon the terms of the contract. Then we have a credit to accounts receivable, which represents the book value of the accounts receivable sold. And then we can have a credit to recourse liability, but this would be for contracts with recourse only. Okay, so that is a description of our accounts receivable. So let's take a look at the example on page 365. On page 365, we know that the book value of my accounts receivable is $600,000. So the book value of my accounts receivable is $600,000. And this is without without recourse contract, meaning who retains the risk of uncollectability, or who has the risk of uncollectability?
The buyer.
Good, the buyer, because they cannot come back to me. So the buyer is assuming risk of uncollectability. And they tell us that they are going to immediately give me cash. So cash on date of sale is 90%. So my amount of cash received is going to be the book value times 90%, which is $540,000. $540,000. The factor is going to retain the 10%. Now, the amount of the 10% is $60,000. So the amount of the 10% is the $60,000. And this is at book value. This is book value. The factor fee is equal to 4% of the total factored amount. So my factor fee is the book value of my accounts receivable times the factor fee of 4%, so $24,000. Is my factor fee, and my factor fee was 4%. So the factor fee is $24,000. Now, the last bullet, when I read it, was confusing to me. And what the last bullet is saying, that after the factor has collected cash equal to the amount advanced. So they advanced $540,000. Once they have collected $540,000 of their accounts receivable, then they will remit to me the 10%. Okay. Now, my 10%, the book value of the 10% that they would remit to me is $60,000. And they're saying that how they're going to collect their factor fee, the $24,000, is they're going to reduce the amount that they will remit to me, the 10%.
Remit means pay.
Pay. Remit means pay. Okay. So the factor will remit or pay the 10% remaining minus the factor fee. Okay, and that is what you read where it said that they will remit, where am I? Therefore, Santa Teresa has a, that doesn't, beneficial interest in the transferred receivables equal to the fair value, we'll talk about that in just a minute, minus, see, less the 4% factor fee. So this contract is saying that the factor fee is going to be collected from the amount that they are retaining. Okay. Now notice that they said that they're going to remit the fair value of the 10% minus the factor fee. Now, what was the book value of the remaining 10%?
36,000
Um,
or 60,000.
60,000. So the book value of the remaining 10% is 60,000. What is the fair value of the 60,000? Oh, I'm on low battery. I forgot to plug in my receivable. I mean, God, my receivable, my computer. Okay. So what is the fair value of the remaining 10%?
How would you start to calculate that?
You don't have to calculate it. It's given to you.
50,000.
50,000. So 50,000 is the fair value of the remaining 10%.
This is given in the book?
Yeah. 65. Is that me?
That was me, sorry.
Okay. The in the book, you know, on page 365,
Yeah.
it says, and it's in which the 10%, which management estimates to equal 50,000. You see that in the book?
Yeah.
Okay, so the fair value is given. As I said before, you will not have to calculate the fair value. You don't have the skill sets yet to do that. Don't mean to hurt your feelings, but y'all don't have the skill sets yet.
Yeah, definitely.
Okay, so the 50,000 is the fair value of the 60,000. So what they are saying is the fair value of the accounts receivable that I sold is equal to 590,000. Because there has been the fair value of the receivables that I sold is 590,000 because there is a $10,000 decrease in the fair value in the remaining 10%. So they could have stated this one of two ways. They could have said the fair value of the accounts receivable sold is 590,000, or the fair value of the remaining amount is 50,000. Okay. So going up here, I know that the decrease in the fair value of my accounts receivable is how much?
10,000.
10,000. Okay, 10,000. All right. Now I have all the information that I need to do my journal entry. What was the amount of cash that I received up front?
600.
540,000.
Good, the 540,000. Now, my loss on my receivable is equal to the decrease in the fair value of the accounts receivable, which we know is 10,000. We know the factor fee, we calculated the factor fee is 24,000. And this was a without recourse. So I know that the amount of estimated uncollectibles is not coming back to me because this is a without recourse contract.
And the 10,000 decrease we get from that 50,000 number, and then we kind of infer that the 590,000 is the fair value.
Well, I'm not inferring anything. If the last 10%, if the book value is 60,000 and the fair value is 50,000, then I know that there was a $10,000 decrease in that the fair value is 10,000 less than the book value.
Yeah, I just mean like we wouldn't apply that same percentage to the book value of AR and get 540 as like the fair value.
Because they decided to withhold the decrease in the fair value from what's going to be the receivable.
Okay. So that 590 is because it's 10,000 less off of the 60,000.
Correct.
Okay.
All right. So now the loss on my receivable is the sum of those three amounts. Okay. And I guess I should have, let me put these over here so that it's not part of the journal entry. So the decrease in fair value was 10,000. The factor fee was the 24,000, and 0 is the amount. So the loss on receivable is equal to the sum of those three. Okay. Now my receivable from my factor is, they said that they were going to remit the fair value of the remaining 10%, which is the 50,000. Now, has the company, the buyer, gotten their factor fee? Have I written a check for the factor fee to the buyer?
No.
No. The way that the buyer is going to get their factor fee is they're either going to withhold it from the initial amount that they remitted, or they're going to withhold it from the amount that they retain. This contract, they said they were going to withhold the factor fee from the remaining 10%. So my receivable is going to equal the fair value, the 10% that they withheld minus the factor fee. So my receivable is the 26,000, which again is the fair value of the 10% to be remitted minus my factor fee. The accounts receivable, what is the dollar value of the accounts receivable that I have sold? What is the book value?
590.
What was the book value of
600,000.
600,000.
exactly? And again, I am
So just to clarify, you're not doing a journal entry right now, right?
yeah, I am, and that's what I am trying to show you, but
Like decrease the decrease in the fair value of AR is not an account.
no, these three are how you calculate the 34,000. That's why I'm trying to get, okay, B is my debit. And C is my credit. And then this is calculations. Okay, is that better?
Yes.
Okay, so I've got a debit of 540,000 to cash. I've got a debit to the loss on my receivables, which is the sum of the three conditions that affect my loss. My receivable from my factor was the fair value of the 10% remaining, 50,000, minus my factor fee. The accounts receivable is the book value of the receivables that you sold. Now, in this problem, our recourse liability is 0. Okay, the recourse is 0. Why is it 0?
Because it's without recourse.
Good, because this is a without recourse contract. Because this is a without recourse contract. Now my journal entry balances, and I've recorded the sale of accounts receivable. Any questions?
So your final journal entry will have 3 debits for cash, loss on receivables, and receivable from factor, and then 1 credit for the AR.
Correct.
You won't have those 10,000 or 24,000 in an actual journal entry.
No, I've labeled this calculations. I've labeled this debit and credit so that you can see where the journal entries is.
Okay.
Okay. I think I've set it up better so that the calculations of how to calculate the loss on receivables isn't, I'm not going to redo this again. So everybody understand the journal entry and where the numbers came from. Notice in the book that it says loss on receivables and it says to balance, meaning that it's a plug entry. That is, I'm pressing the bullshit button on that one because you can tell me how to calculate loss on receivables. It is not a plug entry, a plug number. I know that the $34,000 of my loss is the $10,000 decrease in my fair value plus my factor fee. You understand where the loss came from. It's not a plug number. Okay.
Now that 26,000, where does that come from?
All right. So the 26,000, remember the 10% that they withheld?
Yeah.
What is the fair value of the 10%?
50,000.
60.
50,000. Good.
Oh, 50.
So 50,000 is the fair value of the remaining 10% minus the factor fee. So how they're getting paid for their factor fee is instead of the company remitting a check to them or paying them, instead of the company sending a check to them for 24,000,
They just keep 24.
they're just going to keep 24,000 out of the 10% that they owe me.
Okay.
So instead of sending me 50,000, they're going to send me 26,000 because they're keeping their factor fee instead of me sending a check for the factor fee. Okay. Now take a look at the illustration below it. It's the kind of the same facts. It's kind of the same facts, but this one is going to be with recourse. This one is going to be with recourse. Okay, that's going to be with recourse. So all I did was I copied and pasted, and I'm going to, I don't want to do a split. I want to set it here, and I want to do a split there. Okay, so now we have with recourse. And the book value is the book value of the accounts receivable is 600,000. That didn't change. Oh man, I am so sorry. Is the 600,000, which is not going to change. The 90% that they're going to remit to me is still the same. So the cash on the date of sale is the book value times the 90%, the 540,000. 60,000 is the book value of the remaining 10%, but 50,000 is the fair value of the remaining 10%. Okay? The factor fee is still 4%. So equal the book value of the accounts receivable times the 4% is 24,000. What is the amount of my recourse liability? Meaning the amount that is estimated not to be collected. So what amount did they estimate that of the $600,000 that they expect not to collect how much? So what did they expect that the recourse obligation will be? Because this is with recourse. So how much of the 600,000 do they expect not to collect?
5,000.
Good, 5,000. That's a given. So they expect not to collect $5,000. Okay. The amount that is going to be remitted is still the fair value of the remaining 10% minus the factor fee. So you see still a lot of the same numbers, except because this contract is with recourse, you've got a $5,000 recourse liability. So when we calculate our loss on our sale of receivables, what is the loss on the sale of receivables?
Just adding $5,000.
Okay, right. So the decrease on the fair value was 10,000. My factor fee was 24,000. And the amount that they estimate that they're not going to collect is 5,000. So the total of my loss on my receivables is the sum of those numbers. Okay? So my loss on my sale of receivables is $5,000 higher because of the amount of recourse that I could have. Okay? So now let's take a look at the journal entry. And again, I have messed things up here. So I'm going to my journal entry is going to have a debit of cash of the 540,000, the amount that they're giving me up front. It's going to equal the loss that we calculated to be 39,000. The receivable from the factor is the fair value of the 10% minus the factor fee. My accounts receivable is always going to be credited for the book value of what you sold. And I have a recourse liability to the buyer for what I anticipate they're going to come back to me for, that amount of recourse.
And this loss would be reported on the income statement?
You answered that question yourself.
I think so, yeah.
Right. What is reported on an income statement?
Yeah, gain,
Revenues, gains,
uh,
money.
losses, and expenses.
Right. So answer your own question. The loss is going to be reported on which financial statement?
On the income statement.
Right, on the income statement.
And
Now,
all of the other ones are on the balance sheet.
in operating activities or in other?
Yeah.
No, that was a question. Would this be reported in your multi-step income statement? Would it be reported in operating activities or in other?
In other.
Is it related, directly related to operations? Or is it a financing?
I'm not sure. It seems like a financing to me.
Right. So you're financing your receivables. So it's called a loss on accounts receivable, but it really is similar to kind of your interest expense, the fee that you're being charged to sell it. So it would be in other.
Okay.
Okay. So this is your journal entry for when I have with recourse. For when I have with recourse. Excuse me, with recourse. You can take a picture of the screen if you would like. I know that you have it on page 365. So I'm going to stop sharing this screen with y'all, and you get to see my pretty face again. And that's laughable. If I take my glasses off, you see the circles under the eyes. It's just getting to me. So I'll keep my glasses on. All right, so what we're going to do is go to page 386.
Sorry.
Go to page 386.
Oh, yeah. Thank you. Thank you.
Go to page 386, and we're going to work both exercises 723. No, y'all are going to work exercise 723. We'll discuss that one, and then we will work exercise 724 on page 386. Once we do this, then we will have completed all of the topics in chapter 7.
723, you said?
Yes, exercise 723 on page 386. Exercise 723 on page 386.
Me too.
All right, a lot of these no faces, I really like seeing your faces. I can see how you're doing when you're done. It really helps me a lot.
Sorry, one more time. What are we? What page are we going to?
Okay, page 386, exercise 723. After we work exercise 723, we're going to do exercise 724 after we discuss exercise 23. Whoever that is, it's happened a second time. Can you please turn your phone to silence? Thank you.
That was a different person this time, but that's okay.
Oh, well, when I said it's happened twice, I mean, it's happened in the class twice.
Yeah, sorry.
Sorry, didn't mean to insinuate the same person. Okay, so work exercise 723, and I'll be right back like in 1 minute while y'all are working that problem. All right. How's everybody doing? I still see most of y'all have not shown me your videos so I can see if you're still working or not. Please share your faces with me, please. Remember, on Tuesday, when you're taking the exam, it's required. If I don't see your face, it's an academic integrity. Oh, thank you. Thank you. I got 2 that volunteered to do that. Now, it helps me a lot seeing those faces. Thank you, David. We don't care what hair looks like. We are all at home. It is in the morning. We don't care. We enjoy seeing each other. Thank you, Paula. And if the lighting isn't too bad, I may start doing this from my lanai. If the lighting isn't too bad, I'm gonna have my husband move my whiteboard out to the lanai, and we'll sit out on my lanai and do it. Fresh air. Okay, for those of you still, Anna? Anna, are you finished? Have you finished?
Not yet.
Okay, Steve? Steve, have
No.
you finished?
Not yet.
Okay, Megan?
Yeah.
You finished, Jordan? Jordan Ilm?
I'm still working.
Okay, Sean?
I'm almost done.
Almost done. Hang?
Almost.
Almost. Melissa?
Almost done.
Okay. I'm just rearranging this. Okay, unfortunately, these are, I don't draw, some of the times when they write extra problems at the book, they did 60,000 instead of 600,000, but we'll still get into, so let's look at the calculation. So let's go ahead and work on exercise 723. Now, who wants to volunteer to give me what your journal entry was? So what journal entry did you do? So who wants to volunteer? Who feels comfortable?
Me.
Who's me? Because I'm in share mode. So Hank.
Yeah.
Okay. So Hank, what did you debit cash for?
I debit cash for 54,000 of like 90% of 60,000.
Okay, good. So what is the book value of my accounts receivable?
60,000.
Good. It was 60,000. And they're going to remit 90%. It was still the same percent. That is 90% and 10% is not set. It depends on the contract. So the amount is times the 90%. So we would have the amount of cash that we're going to receive. The 90% is $54,000. Now, so what was your loss? Okay, go ahead with the journal entry. So you debited cash for 54,000. Then what else did you do, Hank?
And then I debit receivable from factor by I use the fair value of 5,000.
Okay, so the book value, so what is the book value of the remaining 10%?
The remaining 10%, give me 1 second.
So what is the 10%, what is the book?
Is it 6,000?
6,000, good. And what did they say the fair value of the remaining amount was?
Is it 5,000?
Good, so 5,000 is the 5,000 is the fair value of the remaining 10%. Okay, so good. So you said that you debited the receivable from the factor as the fair value of the remaining 10%. And so what was the amount that you debited the receivable from factor for?
3,800.
Right.
3,800.
5,000 minus the what?
Minus, I didn't do, minus 120. No.
So minus the, was it the factor fee?
Yeah.
Okay.
It's 1,200.
Oh. And the factor fee is 4%, right?
2%.
2% of the book,
60,000.
right? So the factor fee is 1,200, And so you took the fair value of the remaining 10% minus the factor fee of 1,200.
Mhm.
Okay, so that's how we got the 3,800. Then what did you do?
And then I debit the loss on sale of receivable.
Okay, and the loss on sale of receivable was how much?
I calculate it's with 2,200.
All right, and let's see how you calculated that. What was the decrease in our fair value?
The decrease
1,000.
1,000.
1,000, right? Because the book value of my remaining 10% was 6,000 and the fair value is 5,000. So that means that the fair value of the assets that I sold was 59,000. So the fair value of the accounts receivable. The only reason that I'm giving you that number is because it depends on how the problem is stated. So this one just gave you the fair value of the remaining amount instead of the fair value of the entire accounts receivable. So I just want you being exposed to that it can be worded in two ways. So they said the fair value of the remaining amount was 5,000. So we can see that there is a $1,000 decrease in the fair value. What was my factor fee?
1,200.
1,200. Now, do I have, this is without recourse. So am I going to have a recourse liability in this contract? No?
No.
Okay, no. So I know that my loss is the sum of those three numbers, which is the 2,200 that Hang had correctly told us.
So you could go in either order in terms of calculating the loss and the receivable from factor?
Yeah, why would order matter?
Well, it's just in some of the problems we've worked, like you have to determine you have to determine something after you do a previous calculation. And so here you're saying we could do it either way. We could start and get 2,200.
You've got a journal entry to do and you know what the debits and credits are. So what order you put you want debits on top and credits on bottom, but what order it is doesn't matter. Okay.
I mean the order that you're like calculating it. I'm saying like you can get 2,200 and then you can figure out 3,800, or you can get 3,800 and then you don't. It's like
plugging numbers on what
not
you
dependent on the numbers aren't dependent on each other. Is what I'm saying, right? 2,200 and 3,800.
Right. What I would do is I would just calculate all this information to begin with.
Yeah.
All right. And then do your journal entry, because I had y'all do the journal entry and you're giving me the journal entry. I want to make sure that everybody understands where the number came from. So that's why I'm going through the process this way. She's giving it to me.
That's what I'm just asking about is like the process.
Order doesn't matter. Order doesn't matter at all. So then what did you credit accounts receivable for? So you debited cash for 54,000, Hang?
Yeah.
You debited loss for 2,200. You debited the receivable from the factor for 3,800. And then
I credit account receivable for 60,000.
Good. You credited accounts receivable for 60,000, and we see that our journal entry balances. Okay?
Yes.
All right. So now work on problem exercise 724. It's the same company, but there are different terms in the contract. Not only is it a with recourse, it also takes out the factor fee at a different time. So pay attention to that. That's me getting emails and I haven't shut that off. Do you like this, me sharing the screen and working these problems in Excel? Is this helping?
Yeah, Excel helps.
Yeah, it helps.
I like it.
I
Okay.
got a question.
I like it.
Nelson, I recognize that voice. I got a question.
Yeah, I just explained where the receivable from like the 3,800 came from.
Okay, so the 3,800 was, what was the fair value? Continue working on exercise 724 while I answer Nelson's question. Well, the fair value of the remaining 10% is 5,000. But they're going to subtract the factor fee.
Okay.
Okay, so the 5,000 minus the 1,200
It's the 3,800.
is the 3,800.
So that like that fair value, that 10% will always be given.
The fair
That
value.
5,000.
Have you been listening to class?
Yeah, kinda.
Kinda. The fair value will always be given to you. You don't have to calculate fair value. So that fair value of $5,000 was given to you, but it's important to compare it to the book value so that you know what your decrease in fair value was.
Okay.
Okay?
Cool. Yeah.
Cool. I know it's all cool. Alec, you look like you got this. You done?
Sorry, yeah, I'm good.
Yeah. Okay, good. I'm just trying to look at faces. Oh, show me some faces. Steve, why aren't you showing me? Steve?
Yeah, I'm here.
Why aren't you showing me your face? Maybe you ought to make part of the participation is you need to show your face. It just, again, it helps me. All right, so looking at those of you, I see many of you still working, so. Alex, since you finished first, I'm gonna get you to give us the journal entry. Is that okay? You're comfortable with that? You can just give me a thumbs up.
Now I'm thinking I got it wrong though, because I think I finished too fast.
And you know what? Remember, online is the same as in the class. It's a safe place. And if you got it wrong, we learn from the mistakes. And often that's where good learning takes place, right? So that's okay. It's a safe place. Okay, I'm going to go ahead and let's go through it. Yeah, I see Paula's done. Looks like address, you're done. Miss Wynn's done. Okay, let's go ahead and Alec, talk us through this one.
So your first debit is going to be cash, and that's going to be 52,800 because you're going to take out.
Okay, great. Now, how did you get the 52,800?
Well, you're going to take out 12% is going to be retained by the factor because they're taking the 2% out off the top, and then they're taking also their normal 10%.
Okay, so they're going to remit to us the 90%, right?
Mm-hmm.
Is that correct?
Yes.
But in this contract, they're taking the factor fee out of this cash distribution. You read in the problem the very last sentence that says the bank charges a 2% fee and requires the amount to be paid at the start of the factoring arrangement. So minus the factor fee of $1,200 is the $52,800. So you have to carefully read that contract. Okay? So good. Whoa. How in the world did I just, my husband's gonna be so happy.
You okay?
Yeah, I just broke his
All right.
chair though, but I'm
Yeah.
okay. Gonna be buying my husband a new chair. Must have been a cheap one to begin with. All right, so you debited cash for 52,800. What else did you do, Alec?
Then you're going to debit the receivable from factor for $5,000.
Okay, and the receivable from the factor for $5,000 is the fair value of the 10%,
Right.
right? And
Right.
we did not have to subtract the factor fee from this one because the factor fee came out of the first cash distribution. Good. What else did you do?
And then you got to credit the recourse liability for $3,000 that was given, and then your accounts receivable for $60,000.
All right, so I had recourse liability of $3,000, right?
Mm-hmm.
Okay.
And then you got to credit your accounts receivables for $60,000.
All right, for the book value, good.
Mm-hmm. And then you just take the difference of your debits and credits, and then have the.
Okay, I'm pressing the bullshit button on that. That's true, but that means that you plugged the entry. Explain it to me.
Oh, I just always do it like that. So
Well, I know you always do it like that, but then when you get to the exam and I say, explain the loss to me, what are you going to say? I plugged it?
Yeah.
Okay. And what will you get? How many points will you get if you say I plugged it?
0 probably.
0, exactly.
You
So
have to flip it up, but you could just say like, I found the difference, you know? You don't like that?
No.
That's what I was asking about before. Is if we
On the
could
homework in the video, because I was kind of struggling with like doing that question. It said it was like the balancing number.
I understand that, and you can
Okay, I'm just letting you know.
right. Oh, right. I know that it does, and everywhere in here it says.
That's probably why everyone's saying that.
Right. Oh, I know, but to balance. But I went through the 3 things that calculate to your loss because I want you understanding the number, not just plugging it. If your boss came to you and said, explain the loss, how you calculated the loss from a sale of receivables. If you say I plugged it, they're not going to be very impressed. Okay. So what is So what is the loss?
It's the factor fee plus the decrease in the from the book value to the fair value, and then also the recourse liability. You add those three numbers up.
Right. So we had a decrease in the fair value of 1,000. We had a factor fee of 1,200. And then you had the amount of bad debt recourse of 3,000. And those sum up to the 5,200.
Yeah, because these are the three things that you're actually accountable for, right? Like you have to pay this. They're accounting for the $1,000 loss in fair value. You have to pay the $1,200 fee, and you have to pay the $3,000 recourse liability, right?
Right. Okay, and now my journal entry balances. So again, I haven't spent valuable class time talking about how the loss on the sale of receivables is calculated just for you to say it's a plug number. I know that the book says to balance, to balance, to balance, but you can't explain the number. Okay, it's your decrease in your fair value plus your factor fee, that's right here, plus the amount of recourse if it is a with recourse. If it is a with recourse, it changed because of, all right, so does everybody understand the journal entry?
I don't. I got a question.
Go ahead, Nelson.
Can you go over how the 52,800 got there? Like I understand there's a 2% fee, but how's that calculation made?
Okay, well, the 2% fee is the 60,000, which is the book value of your accounts receivable, times your 2%.
Which is the factor fee.
Right, because it said that in the instructions, God bless you, it said in the instructions that they charge a 2% fee. You see?
On the book value.
Right. So my factor fee is the 60,000 times the 2%. In this contract, read the very last sentence. It said that the factor fee is going to be subtracted from the 90% that they are distributing immediately. So the 90% is 54,000, 90% of the 60. So the 52,800 is the 54,000 minus the factor fee.
You get that from like the very last sentence, like requires that amount to be paid at the start of the factoring arrangement?
Right. So since the factor fee is going to be paid at the start of the arrangement, that means that they're taking it out of the original cash distribution to you.
Which is a 5,400. Okay.
Which is the 54,000. Yeah.
I mean, yeah. All right.
Okay.
Got it.
Can you just explain again on loss of sale of receivables, like what the theory behind that is? Like, as you're saying, it's not just a balancing method.
Okay. The theory is that when you sell accounts receivables, that you're going to have a loss when you have a decrease in your fair value.
Okay.
You've got a loss.
The loss.
You also have your factor fee. So instead of reporting that as an expense, it's part of your loss on selling your receivables because you had to incur that fee in order to sell them. It's like, the commissions paid to a real estate agent.
Right.
Okay.
Okay.
Plus, you're going to have a loss from uncollectability. They're not calling that loss bad debt expense. They're calling it's part of the loss. It's reported as a loss instead of being reported as bad debt expense.
Mhm. Okay.
Okay, so that's the amount of the 60,000 we expect not to collect.
Okay.
So-
The exam, are you going to ask like for some of the free response questions, like to delve into like why you did your journal entries?
Not, you need to understand when you're doing problems. This is the thing about intermediate. When you are doing problems, you can do the problems because based on your understanding and work the problems. In the multiple choice is where I can get into the critical thinking of, do you understand what you did?
Okay.
And this is explaining, do you understand what you did?
All right. Thanks.
Okay, you're welcome. So no, am I going to ask you to explain every number? You know, when you show your work, I don't know how online you can show your work, but the multiple choice is where you get into where you could be having to explain your numbers.
Mm-hmm.
I had a question on, you just said like, I don't know how I'm going to do that.
Can you take a picture? Has everybody gotten this? Either take a picture of it, because I'm gonna stop sharing the screen in just a minute. All right, 1, 2, 3, stop sharing. Okay, I'm back. All right, so we have now covered all of the material that will be on the exam. Now, y'all had the topical coverage that I had given you, and I assume that you have been through the practice problems. Oh, wait, stop. I'm gonna send out a question for y'all. Oh, crap. I did them in the, it's a shame I did them in the 8 o'clock class and you can't copy them over. All right, I'm going to share a screen in just a minute. Let me open up. Thankfully, I have them on in a Word document. All right, so I'm going to share screen with y'all, and then I want you to send to, I don't know how I'm gonna do this, but anyway, I'm gonna share screen. All right, let's discuss this question. I didn't copy the polling questions over. I can't copy them. I have to actually retype them in, and I didn't do it in the 8 o'clock class. So what I would like for each of you to do is in your chat, you know, you can chat with me, send me your answer, A, B, C, or D.
I can't see the problem yet if it's supposed to be up.
It is up. Let me ask, who can see it? Thumbs up.
I can see it.
Okay.
Okay, I think I got it. It was like in the corner, really small.
So you got it now?
Yeah, I think so.
All right.
Thank you.
You're welcome. All right, I'm going to stop sharing the screen in about 10 seconds. And I'm going to need a response for everybody for the participation and attendance. So I'm going to count down 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Right. All right, so I'm gonna stop sharing the screen now. And 20, thank you, baby. Thank you, handsome. Oh, here's Nelson. You want to tell Nelson hello? Nelson, here's.
Where's he at? Sitting on the slate?
Right here.
There.
I'm over here.
You see him?
How you been?
Do you see him over there in the corner?
How you doing, Mr. Bosty?
My husband taught Nelson chemistry
Long time ago.
a long time ago, right? All right.
Enjoy.
All right, so let me see. All right, the majority of you, I've got no idea. B, most of you answered correctly B. And B is the answer. I'm going to go back to sharing the screen so that we can talk about it. So we've got a 6-month contract and $1,200. So how much is earned each month?
200.
200. So on June 1st, when Mary signed up for her ceramic course, she signed up and she paid. So what journal entry was done on June 1st?
Cash, deferred revenue.
We debited cash, $1,200. And what did we credit?
Deferred revenue.
Good. We credited deferred revenue for $1,200. Okay. Now it is asking, as of August 1st, what would the accounting records indicate? So on August 1st, what journal entry was done?
Deferred revenue credit.
We debit deferred revenue, good, for the 400 because we've earned 2 months. We earned June and July, so we've earned 2 months, and we would credit what?
Sales revenue.
Our service revenue, because we're not selling inventory, for 400. Now, when I look at the results of these 2 journal entries, we see that service revenue was credited for 400. So we know that the correct answer is either A or B. We've got service revenue of $400, the 2 months of revenue that we have earned. What is the balance in my deferred revenue account? 800. We credited it for 1,200, and then we debited it for 400, leaving you with an $800 balance in your deferred revenue. One of the things, like when you're taking multiple choice questions, when I read this multiple choice question, the first thing that I noticed was that it was paid, that she had already paid it. I would highlight that when I was taking this multiple choice question. It was already paid. So since she already paid it, I know that there is no accounts receivable because it's already paid. So you've eliminated A and D. just by understanding that one word that I highlighted, that it was paid. Then I know that I can only recognize 2 months of revenue, which is $400. So out of B and C, what is the one that shows $400 of revenue? B. So that is a way that you can approach taking the multiple choice questions. Does anybody have any questions about this one? Okay, I'm gonna stop sharing. No. Maybe, let's go do ahead and do another one. All right, so you probably already saw the answer, I just did it, but let's do this one. And go ahead and send to me in chat what your answer is.
Is that 2,000 like over the course of the 6 months?
Right.
Okay.
So it's not 2,000 each month, it's just 2,000. Okay. And the other, one of the things that I would highlight is that you're using the most likely approach versus the expected value approach. And
I
then
have a question on the exam. Sorry about that. For the exam, how is partial credit gonna end up working?
it's not.
Okay.
Because, you know, it's Connect. The only way they'll be, I haven't done your exam yet, and I did the 202 exam. That was easy. But the y'all's exam, I, you know, I can write my own questions, and then I will have to grade those on my own instead of them being graded, you know, on Connect. And then I can give partial credit there. But, you know, a lot of your problems are going to be like you've been doing in Connect, you know, with the drop down menu and filling in the number. So now there is partial credit in that, just like in Connect, it's not all or nothing. It depends on what, you know, there's points allotted to each little thing. So extra credit works in that sense. If you get part of the question right, you get points. You've seen how it works in Connect, where you get points for everything that you enter in. All right, I'm gonna go ahead and stop. Well, not sharing, so I need for everybody to go ahead and get entered in an amount. Okay. All right, so I'm well, I'll check well, no, let me check the chat now, sorry. So that means that I've got to stop sharing. And most of you, I got no idea, B, B, C, B, 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 some of, okay. B is the correct answer. So I'm going to go back to sharing my screen so that we can explain it. I think it's that one. No, it's not. There it is. Okay, so what we have is the contract amounts are either 8,000.
You're showing the wrong screen. We're looking at Excel.
Oh, are you? Okay, I'm gonna stop sharing and I'll do share screen again. Oh, here it is. Is that better?
Yeah.
Okay, so the contract amount are either 8,000 because you have the 1,000 a month times 6 months, that's 6,000. And which one is the most likely that I'm going to have is either 8,000 or 9,000?
8,000.
8,000.
The 8,000 is the one that is most likely. So we don't have to apply the percents like we do in expected value. So the most likely amount is 8,000. So if I take the 8,000, how many months is the contract?
6.
6. And 8,000 divided by 6 is how much?
1,333.
1,333. So what is the amount of revenue for the first month? 1,333. It didn't ask this, but what would my journal entry be? For 6 months, and let's assume that they're paying, right? So just as review, assuming the 1,000 is paid each month, what is the journal entry for the first month? So what would I do? Well, how much cash am I getting?
1333.
1,000.
1,000. So we're going to have bonus receivable of how much?
333.
Good. The 333, and then we would credit service revenue for the 1,333. So that is the journal entry that would actually be done each month. Okay. Now, depending on what y'all, some of y'all have questions on specific problems in any of the chapters between 5, 6, and 7 that y'all want to work?
I just had a quick question from the quiz.
Okay.
What was the answer to the question that was about the 90 days and if it was cash or if it counted as cash and cash equivalents? It said like a money. I'm not sure exactly what it said, but it said money fund of some kind.
Let me see. You can go back into your quiz. So David, go into your quiz.
Oh, okay.
After 1 hour after it is due, you can go into your quiz and get feedback.
Oh, okay.
Our quiz?
Yeah, so you remember on the quiz that, what quiz are you talking about?
True or false?
I didn't take the Connect yet. I'm sorry, 202 did.
Was
So,
it the true or false one?
Yeah, I'm just asking about the chapter 7 quiz.
okay, I don't even, that was one that was given in class. David, that was one given in class, or?
We took it outside of class. We were supposed to take it at the beginning of class, remember? And then it got.
Okay, so it is in your Connect. It was a Connect quiz.
Oh, okay. That's why I didn't. Yeah.
The question is cash equivalents would include investments in marketplace equity securities as long as management intends to sell the securities in the next 3 months.
Okay. Remember, the definition of cash equivalents is if the maturity date is 3 months or less than the purchase date. It doesn't, right?
So it doesn't matter what type of fund it is. It just.
Exactly. Cash equivalent is everything about 3 months or less from the purchase date to the maturity date.
Wait, on the quiz it says that that's.
Can you go into your quiz?
Yeah, on the quiz it says that's false.
Right, it is false because what was the purchase date of the asset?
I'm not sure, but it says it intends to sell it in 3 months.
Okay, so read the question to me again. I know Nelson read it to me, but.
It says cash equivalents would include investments in marketable equity securities as long as management intends to sell the securities in the next 3 months.
Right, that is false because I can buy an equity security or any type of marketable security. And it is only a cash equivalent if the maturity date is 3 months or less than the purchase date. It doesn't have anything to do with management's intent. Like I can purchase a marketable security and it's got a maturity date of whenever I want it to be. Like if I bought equity.
Okay.
Even though my intent is to sell it within 3 months, the maturity date is not 3 months from the purchase date.
Okay.
That's such a trick question.
Well, and those are the types of questions that make you think.
Yeah, but like we knew the 3 months thing. You switched up the wording at the end just to get it wrong.
But
I mean, I'm just being honest. That's what you did.
I didn't write right. Students, they want to say they're trick questions. Trick questions are those questions that are testing your understanding and applying that critical thinking. And that's
I bet
it's called.
if you would ask David about like how long does it take for something to mature to make it a current asset or a current, he would have said 3 months.
3 months from the purchase date. It doesn't have anything to do with management's intent. Okay.
I'm just messing.
Okay. So does that answer your question on that, David?
Yeah. I also had a question on the first question on the quiz. If we could just address that. I don't want to ask all these questions. If I can ask later too.
Okay. So again, you're going to have to tell me the first question on the quiz.
It says on November 10th of the current year, Cherokee Industries sold materials to a customer for $8,000 with credit terms 210 and 30.
Okay.
Okay. And then it says Cherokee uses the net method of accounting for sales discounts.
It was 8,000.
Yeah.
210 net 30.
Yeah.
And they use net.
Yeah.
Okay.
And so then it says what, and this was on November 10th. And then they say, what entry would Cherokee make on November 17th, assuming the correct payment was received on that date?
Okay, so did they pay within the discount period?
Yes. Didn't they?
Well, right. So they paid within the discount period because November 10th plus 10 days would be November 20th.
Yeah.
So they paid within the discount period. So how much would they be collecting?
$78.40.
Right. So you would debit cash $78.40 and credit accounts receivable $78.40.
Okay, that's the net. So the gross method is when you would debit sales discount.
Correct.
Okay.
The gross method does not have sales discount.
Okay.
And no, I just told you a story. The net method does not have sales discounts. It has sales discounts forfeited.
Okay.
The gross has sales discounts and does not have sales discounts forfeited.
Okay, yeah, I think I just confused that. Yeah.
Okay, is everybody good on that one?
I have a question.
Sure.
So on Connect, problem 5, we didn't really. I don't think we've gone over this in class, but the discount rate. Are we?
I got.
Discount rate
Yeah,
and like.
that's the same question.
I was about to
I
ask that too. I got that wrong.
I got like a 70%.
Okay, what's it about? Let me see. Let me right now see if I can go into Connect.
Yeah, like the last 2 questions of our Connect, we did not talk about in class at all, and like.
Yeah, they were so hard.
They were hard, and we had no hints.
Yeah, I got 5 wrong.
Y'all have hints.
Because they didn't have hints.
Yeah, only the first 2 did.
Okay, so this is on Connect Homework.
Chapter 7, part 2.
Chapter 7, part 2. All right, and I am going into address. I'm going to be violating. Okay, never mind. Nelson, I'm going to use yours. Is that okay? You're at the top of the
You
list.
can put my 70% up there. I'm
Yeah,
fine.
you're good.
Okay, so I just have to get permission to do this. Okay. So I am now going to share screen, and I am going into, okay, so Edris was sharing a grade. I'm breaking law, but
I gave you permission. It's okay. The last 2 questions were just really hard and no hints.
okay. This question, you have the skills to get this question. And this is a great question to go through to make sure that you understand.
Is this 5 about the interest rates?
No,
and discount rates?
This one, okay, so.
Oh, I'm sorry, 6. 6, yeah, 6 and 5. But we can go over 5 as well. I mean, but
well,
6.
5 we need to go over.
Okay.
All right. So, see, I got this little great button right here that says show correct answer. Oh, all right. This is discounting notes receivable, which is not going to be on the exam. It usually is, but going to online formatting, going to online delivery, I'm just taking out the part where you have to, when we sell notes receivables, we call it discounting a note receivable. This part will not be on the exam. So that's why I did not discuss it in class. What I can do,
question 6 is not going to be on the exam?
Question 6 will not be on the exam. The only thing about notes, of course, you have to know interest-bearing notes and non-interest-bearing notes, but discounting notes receivable, which is what this question is about, is, as you said, it's complicated. There are a lot of number crunching. There's a lot of number crunching. And so this is one of the things that just got pulled out once we went to online delivery. And normally it is in the class. So this one I didn't discuss in class because it's just something that's just being taken out since we transitioned to online. So what I can do is, it's a great learning for those that spent the time doing it and looking at the chapter, a great learning experience. If you want to take a picture of the correct answer so that you can learn it, that's fine, but it's not going to be on the exam. What I can do is I will go back and adjust. So I'm going to make a note so that you do not have to send me emails. I'm going to make a note on my to-do list to look at. And for question number 6, I will adjust your grade.
Thank you.
Thank you so much, because I had the same question.
Well, probably you all did.
Yeah.
I had 100 on it.
You all did. Okay, so that's the answer to that. And then the explanation, if you want to take a copy of the explanation so that you understand it for your knowledge. I normally teach this. Okay, so is everybody through with okay with this screen share?
I just got a question on, because my connected was 5 questions. Did you assign like 6 or?
Everyone gets different ones.
Everyone gets different ones. Yeah, I had it as a pool, so.
Oh, because I only had 5 questions on the homework. That's what I mean.
Yeah, everybody got 5 questions out.
Oh, okay. But there's 6 different types you could ask. Okay.
Right.
Got it.
All right. Now this question is whether you got it or not. This is a great question that tests your understanding of.
So really quick, I'm sorry. So I always get confused with the in millions. So accounts receivable minus allowance for uncollectible accounts is gross account.
Yeah.
Or no?
Yeah.
It is?
No.
So it should just be 4,060 or 4,062 minus whatever, right?
Oh, plus.
So you add your allowance, you don't subtract it.
Okay. I'm going to put on oh, y'all can't see. All right. Accounts receivable minus your allowance equals net accounts receivable.
This is just a quick question because I have to go to another class. It's just about the test. It's just about open book. Is it open book, or did we establish that we can reference?
Yeah, because I can't control, y'all. Yes, I'm going to be watching you. Everybody is going to be on webcam. On the exam, you have to be on webcam. If I don't see you, you take it off. It's an academic integrity violation.
Yeah, definitely. But we can look in the book.
But you got, right, open book, open notes, everything, because, I have to level the playing field for everybody. I didn't realize it was the end of class time.
That's okay. Yeah, I just want to make sure about that.
All right. I can.
Okay, thank you.
You're welcome. So let me go through this question. I don't have time to go through it. What I'm going to do is I have it where it show the correct answer. So if you want to take pictures of the screenshot, I'm going to go through requirement 1, 2, 3, and 4. This is a great problem that tests your understanding. So get your cameras out and start taking pictures.
I have class, so I have to go.
I have class as well, so I'm heading out.
Okay, I will continue this and I will just have it so it's on the recording, okay? So I'm just going to go through 1, 2, 3, and 4. Look for an announcement. I'm going to have open office hours from 1 to 3 on Monday. I will send the link out for everybody to see so that from 1 to 3, I'm just going to be sitting at my computer for people to come in and out to ask questions for the exam on Monday. Okay? So I'm just going to scroll through this before it ends. So you don't have to take pictures. It will be on the recording as a screenshot. So y'all can go ahead and exit out if you want. I'm just doing this for the recording.
Thank you.
You're welcome. All right, for those of you that are still here, notice the T accounts analysis that was used. T accounts are your friends.
I had that's so stupid because I always get confused. So I had 7100 instead of 71, and like so stupid. Okay, that's it. Thank you.
You're quite welcome. All right, so
Yep,
this
have a
will
good-
be in the recording, and then I will have open office hours. I will be posting an announcement because I want to be as available to y'all getting ready for this exam on Tuesday as possible. Okay,
Okay, thank you so
All right,
much.
thank you, Dr. Bostic. See
Have a
you.
great day.
you're welcome.
And thank you for saying you're going to change that question. I appreciate it.
Yeah, no problem. I understand. I can't fix what I don't know about, so I'm glad y'all told me.
Right. Yeah, I spent so long. I was like, what is this?
Right, and that's one of the things that we didn't. And of course, the Connect was set up in the beginning of the semester, and I had no idea where we're going to be going online, and
Right.
not going to be covering that. So,
Thank you so much. I'll see you around.
all righty, bye-bye.
Bye.